in terms of I've gotten this question so many times. It's like how come I'm able to identify high probability setups? What determines something for me to be high probability? And in this video, I'm going to break that exactly down on high probability trades and why I shifted the focus from Euro to NQ. Now, I'm going to first go over to Euro and let's kind of start off with this, right? So for EU, obviously I wanted to see if we could possibly push a little bit higher. And this was honestly more so because DXY. Like with DXY on the weekly time frame, I thought we were going to potentially try to at least tackle a little bit closer to this low. And to be fair, we still could. Like the weekly candle still printing. Maybe we reject above here and then head lower. I don't know. We're going to see how that plays out. But the bullish bias was primarily based off of that. Now, when I go to the daily time frame, I wanted to obviously see this overall bullish structure maintained. Now, if you guys watched that time frame alignment video, what did I say? I say, and I referenced it before. I referenced it going into Tuesday as well. If I'm bullish on the daily, I need my time frame alignment. So my 4-hour time frame also has to be bullish. And if that's the case, this is going to be a situation where, okay, I know the daily is bullish. I know the 4-hour is bullish. Now I can start to look for like entries. Now, I'm going to do a quick video. I'm going to do a quick lesson right here on market structure. I'm going to have a separate video on YouTube presentation style with this. But for overall bullish market structure, if I see the market has an impulse push, right? Typically on this time frame, let's just say over here was the daily time frame, right? And let's make this black. Typically on the move lower, I want to see the market, which this is going to be on the 4-hour time frame. So let's make this like a blue color. So on the retracement, I'm essentially going to want to see the market structure shift, have some sort of bullish price action and bullish shift, right? So market structure break, and then we start to look for something what I call is the backside move. Essentially, we have the market going from bearish to bullish. And let's go ahead and we're going to do this like a different color. So right, higher highs, higher lows until we hit that point in here. So this, let's just make this like, let's just do a gray or something like that. Now, this is typically what I'm looking for, right? Because I don't want to buy bearish structure in this example when I have my clear objectives. Like if I have my clear structure on the daily, I want my 4-hour, right, time frame alignment to be in sync with this. Now, when the market comes back down into this order block, obviously we pretty much had no reaction. And I'm going to go down to the 4-hour time frame, but I just want people to understand this concept. Not only that, but the reason why I required it specifically for this is because we already took out the prior week high. So if we go to the prior week, we had the prior week high in here. We took out multiple liquidity pools, so especially right off the open. So typically when we have this and the market sweeps liquidity, sometimes we get a retracement back into like the overall range. So like maybe like OTE around here. Or like in this, which ended up happening, the market is completely reverses and takes out liquidity because the market is going to go from premium down to a discount. Now, sometimes that discount could be like an order block in here, like inside of this overall swing. So swing low to swing high, or it'll seek this low. And in this example, obviously, it's seek that low. Now that we have that kind of framework, let's go down to the 4-hour time frame. And this is exactly what I'm referring to, right? We took out all these highs. And again, I was still looking for a bullish price action. But then exactly on this, especially when we had this kind of rejection where the market retested right here, failed to make new highs, we actually took out the liquidity above here, and then we had a displacement like lower. Look at the structure that the market was creating, right? The market was creating lower lows, lower highs, lower lows. This order block was being respected multiple times, reject, and we never had any displacement to the upside. So going back to the concept that we talked about, right? If we have like this overall impulse leg, which is on the daily time frame, I want to see the market have that bullish shift. And that's why I said I'm going to focus more so on NQ, because Euro wasn't really showing this. This was actually just showing bearish price action. Every bearish fair value gap was being respected. Every bearish order block being respected, right? And I'm not looking to do that. Now, someone might say, hey, well, why don't you just flip bearish? And this is the thing. Sometimes I will, depending on the context, but overall, I don't like to do that because what if, let's just say, obviously in hindsight it's 2020, but let's just say I'm like, you know what, this might be bearish, I'm going to just go short here, all right, or look for sells. The problem is, what if the market at this exact moment when I try to short does something like this becomes an order block, and now we start to see that backside structure that I was talking about in here. And then, you know, price makes new highs. Then this would set me off on like some sort of tilt. Or like, let's just say this would just be something that, you know, I just don't like to do personally for my trading. Now, some people could do that. Me personally, again, depending on the circumstance, depending on the trade idea, I don't necessarily like to flip biases, especially like let's just say if the market is already at like OTE, right? So the market is inside of like a discount, meaning the market from swing low to swing high is below the 50%. So let's just draw that fib out. So if the market is at the 50% or below it, like let's say in this specific example, I'm not trying to look for sells right here because again, you're kind of running into a situation where the market might chop around these levels, or if you're not right on the trade, the market starts to head higher and then come maybe tackle this high, right? Like again, maybe like a short around here, you could argue that this one would have been okay because we still were around the 50% and we could have traded a little bit deeper into a discount. But that's just a little snippet. Now, contrast that with NQ. NQ was the exact opposite. Like starting on the daily time frame. Look at this. What do we have here? We have this big bullish impulse. The market had this fair value gap. And then what happens, right? We know that this overall structure from swing low to swing high, we do have this gap as well. But irregardless, the market had this big daily candle that closed very strong like this. We created an order block. The market, this is potentially our higher low point because the market is going to make a low that's higher to the one to the left of it. So if I know that this is going to be the potential upside target, what I'm going to be interested in is, okay, I have my potential higher high point. I have my potential liquidity pool, right? We have a bunch of equal highs in here. So now the daily for me is what? The daily in this example is bullish. Now let's go down with the time frame alignment concept, right? On the 4 hour, what do we see as well? The 4 hour structure is also bullish. So now what do we have here? We have our time frame alignment principles. Very, very simply put, like this is something that I look for every single week. Now again, on the 4 hour, let's mark our structure, right? Remember what we talked about, right? How there's on the downside, we have bear structure. So we have bear structure on this overall leg. And then on this overall leg, we have bullish market structure. So let's go ahead, take a little bit deeper look into this, and we'll map out our structural points. So the market, again, we sweep down into that daily fair value gap. The market forms a bullish fair value gap. So we have swing low, swing high. Market respects the bullish level and then has another push up. And then we start to make swing low, swing high. So for me, I'm like, all right, well, this is the current structure on the 4 hour. 4 hours bullish.